How's it going, everybody? I'm Michael. I'm one of the new financial strategists here at Truevir Financial. I have the pleasure of introducing Brandon. Brandon is a senior financial strategist for Truevir Financial. He's been working in the financial industry for 5 years now, obtaining licensing in and certifications in multiple areas. Best serve his clients. Brandon has helped multiple individuals and families to help secure their financial future, always putting the clients first. And without further ado, Brandon, take it away.
Thank you, Michael. Um, Thank you guys for joining on tonight. You could have been anywhere else in the world, but you are here with us to learn some very important information and things that aren't necessarily spoken about as often. Please keep in mind, this is not financial advice. This is all for educational purposes. And with that being said, let's get into it. So, understanding life insurance, the super piggy bank. We will be speaking about index universal life uh, insurance policies today and how we can utilize them to not only secure our families, sorry about that, secure our families' futures, but also help in asset accumulation. So we're going to talk about the index universal life or IUL as the super piggy bank, right? Imagine a piggy bank that doesn't just hold money, but it also helps grow it and protects your family at the same time, right? There's a safety net involved with it. Um, Money for your family if something happens to you, albeit you expire. Think of this piggy bank as something that will protect your family as a superhero would. And then also, so what is index universal life insurance? Um, Essentially, it's a life insurance policy, a permanent policy where you have both a death benefit and a cash value component that grows and that you can access it while you are living. So, pretty cool things with that. So, how the money grows. Uh, Index, it's in the name, right? So, the magic index, it essentially just shows how your companies that you are tied into are doing. If they do well, you make money. You gain interest towards your cash value. And then if it goes down, you have a floor to where you don't lose. In some of our carriers that we use today, they have a 1% floor. So even though you have a dip in the market within that indice, you still can make 1%. And there is also an option to have a fixed component to your um, cash value part so that you can still grow your money at, I think at this point, it's 5.4, 5.5% year over year. Um, as you can see, the index is a scoreboard. If we're going to look at it like a game, right? Index and scoreboard, we show how the company is doing up, down, flat, anything in between. Second, the game, if the scoreboard goes up, like I had said before, your piggy bank or your IUL cash value gets a bonus in the form of interest. And like I said, the best part is we don't lose. If the companies have a bad year that you have your index tied to, that you have allocated your funds to, you don't lose any of your hard-earned money. So there's that. Floors and ceilings. So yes, it's almost sounds too good to be true, right? But there is a floor on your cash value component of your IUL, meaning you have a 0% floor. Stocks drop, you don't lose any money. However, if they go up, you do gain money or interest credited to your account. Now there's a cap, right? There's a cap, meaning say the index goes up by 20, sometimes some companies will cap you out at a 10 or 12% growth rate. There are also other companies that we work with that have an uncapped strategy. Market goes up by 20%, you get that 20. It all just depends on what company we go with, what is best suits you, and what best fits you. And all that being said, we still have the safety and protection of one, again, the floor, and two, the death benefit to take care of your family later on in life or later on in their lives. So, what can we use this for? The cash value component of an IUL doesn't have the stipulations of, say, a qualified account where you have to wait till retirement to touch that money or the cash value of it, so to speak, right? So you hear a lot of people saying living benefits when it comes to these type of permanent policies. Well, one of the biggest living benefits of the IUL or Index Universal Life is that you can take it out and use it for, per se, a college fund for yourself or your children. You can use it, put a down payment, or if you build enough cash value, you can buy a house outright, or you can also use that for retirement. Um, that can supplement your retirement accounts, be them, Roth IRAs, TSPs, traditional or Roth 401ks. But those are also tied to the stock market with an IUL that has cash value in it. You can use it for retirement to supplement your retirement, meaning if the market takes a dip and your qualified account or retirement accounts go down in value, you don't have to take from it that year. You can use your index universal life using going into another bucket and use that to supplement your retirement so that you don't have to eat away at your retirement funds when they are down. Um, Also, so there's a tax-free bonus, right? Usually the government doesn't take a cut of this money when you use it. Um, yeah, because all of this cash value is wrapped in a life insurance wrapper. The government technically doesn't see it as money that can be taxed. There are certain stipulations where they can have what's called a modified endowment contract that can make it a taxable event, but that is our job as your financial strategist to help out with making sure we don't make this a taxable event. We want to make sure that tax-free in retirement is the best way to be, right? So, a couple questions usually is why doesn't everyone do this? Um, yes, okay. One thing is nothing's totally free, right? There is a cost of insurance that comes with this. However, we at Truevir, we like to properly structure these policies so that the cost of insurance is the lowest possible so that we can maximize the cash value for our clients, right? That's the biggest thing. At Truevir, it's people before profit, and we take care of our clients first. Second, why don't people do it? Patience is required. It isn't a get rich quick scheme. I mean, yes, we are solidifying safe assets, but at the same time, there's no moonshot all the time, right? So it takes some years to build up cash value, but again, there are also ways to um, give you more cash value up front based on the structure of the policy, right? And I have a couple examples later on that we can show you what I mean by that. And so, people they waver in their goals, right? Why people don't want to do this? Sometimes their goals are to be, let's go drive a Lambo and get a $3 million house in Beverly Hills. But the real goal should be financial stability and your family's future, right? That should be something that we all want to strive for is to take care of our families, care of our loved ones. And like I said, everybody doesn't have it because, they waver in their goals. The last thing that's not on the slide is lack of or misinformation. A lot of people they say, or you'll see people pundits on social media, right? Talking heads, they don't fully understand how to use or utilize these policies. So they think it's expensive. They think it is a waste of money. But at the end of the day, you're creating a safe asset while protecting your family, and those are, again, one of the goals, right? So a real life example, you guys could read through it with me. Johnson family, see how the IUL or Super Piggy Bank helped them plan for their future, right? So let's meet the Johnsons. Sarah and Mike Johnson, both 35, with two kids. Mike works as a teacher, Sarah's a nurse. They want to make sure their kids go to college and they'll have money to retire someday, right? They decide to start a Super Piggy Bank policy, putting $300 every month. Um, and It wasn't easy at first, but they budgeted it out and figured it out, right? So after 10 years, for simple numbers, they put in $36,000, right? With the cash value growing to $45,000. Now, that may not seem like a lot, but there is never any losses, and this is tax-free access to take care of Emma's college. All that being said, we also have $500,000 in coverage that we can take care of their family, provided Mike or Sarah pass away. So, long story short, the Johnsons sleep better at night knowing their family's protected and their money is growing safely because they never lost on any downturns of the market. So, I mean, there are plenty of options, right, when it comes to this. The Super Piggy Bank, the IUL, right? We want to look at it as a long-term savings vehicle, right? But let's compare it to a couple things, right? So, regular savings account, the pros are it's easy access and safe. The cons are it doesn't really grow and there's no protection to your family. It's best for emergency money that you might need quickly. We always preach that 3 to 6 months worth of expenses are in your savings so that we can make sure that anything immediate, any emergency is immediately taken care of, right? Another option would be term life insurance. The pros, they can be cheap for protection of your family, but the cons, of course, there's no cash value because it is a term policy and it ends within 20, 30 years, and then either you lose the policy or your premiums astronomically jump up. I mean, those are best for people who need protection, but not necessarily savings component. Now, if we put both together, we have the Super Piggy Bank or the IUL, where there's protection and savings, tax benefits. Because of the tax-free growth, you don't get taxed on accessing the money or any of the gains taxes that would be for, say, a brokerage account, right? And then again, there's safe growth. Cons, yes, it takes patience, it has fees, it's a little bit more complex, but that is our job from Truevir to give you guys the education so that you're fully knowing what it is that we're doing and how to utilize it, right? And again, the IUL, best for long-term planners. If you have something you're planning 10 years down the road, this is a great savings option for you. So common questions parents ask, how much should I put in? Okay, so most families start with 100 to 500 a month. Start with what feels comfortable. It's a sliding scale. You don't always have to put this much into it because it just depends on. So if we're opening for a kid, depending on how old they are, we want to make sure that the savings component grows enough for to meet the goal of which we want it to play in the child's portfolio, right? Could be for college, could be for a new car, could be for investment properties. So we have to tailor that uh, premium approach to that. A good rule of thumb is whatever your age is, times it by 10, and that's usually how we come with a fair or ballpark number of how much to put into a policy to make it grow, or for an IUL at least. When can I use the money? Usually after 10 to 15 years, once enough cash value is built up, the longer you wait, the more you'll have, right? But like I said, if there is something that you want to use it for before that 10 years, we want to make sure one, the goals are set so that we can tailor the design of the policy to every individual client, right? What if I can't afford payments? So you can lower payments or take a break using your cash value. Life happens, policies have flexibility built in. Um, what you put in or what you're putting in isn't the minimum of what you can put in, right? Just to keep policies alive. Some clients have decreased their premium to the lowest amount allowed by, the parameter set by the carrier of which they had chosen. Also, if you have cash value built up, if you have to take a month or two off, the cash value can be paying for your premium, but the cash value will also decrease when it is used for the premium. Okay, so it's a give and take here. And then another question is your money really safe, right? Yes, the floor protects you from losses. The insurance companies are heavily regulated to keep your money secure. Um, they invest in high grade bonds. They have what's called, or what they use is the bull call strategy, which we can get into another time if you want to talk to me more about it. But essentially, we keep that 0% floor to give no losses to our clients. So we make this a safe asset for you and your money. So is this right for your family? It isn't for everyone, but it can be used for a lot of people, right? It's not for everyone. It's okay. Um, Here's a couple instances why it might be great for you, right? You want to protect your family and save money at the same time. A lot of people want to protect their family and say they're going to save, but this strategy kind of forces you to save, which at the end of the day is a really good thing, especially if we will need that money down the road, right? Um, Again, some people can commit to putting in money for 10 to 15 years, depending on the design of the policy. You can, break even in year 7 and use money that you need it for. Me personally, I had a policy for 4 years. I built up cash value. I used it to pay for my car. And again, 4 years is not 10 years. And I had enough to put down for my car. It was just how much you put in when you get into it, right? Um, People like the whole idea of safe growth without risking big losses. When you lose, you got to make double just to break even, or 1.5 times what you lost to break even. So not losing is always a great thing. Um, it might be great for you if you have already started an emergency savings fund. You have your 3 to 6 months, and you want to put your money to work in another bucket or another avenue. IUL is a great way to make sure that happens. And people want to use tax-free money in the future, right? When you access the cash value, again, things are coming out tax-free. You don't have to worry about Uncle Sam asking for his cut or their cut because they don't see it technically. Um, so when it might not be right for you, right? You need money to access cash quickly within 1 to 2 years. Again, that just depends on one, design, and two, how much you put into it in the first couple of years, right? There has been times where people have front loaded. There was plenty of cash value, call it 20,000. As soon as 30 days after they had started and put money into their policy, they were reusing it so that their dollar is working in more than one place at the same time. Um, and then, they want a chance to make really high returns with even more risk. Yes, you can play the stock market. That's not a bad idea. But with some of the strategies or some of the carries that we use, there's no cap as well. So, you can have a moonshot every once in a while. With one of the carriers that we do use, I believe they said 1 year the highest rate of return they got for one client was in the 70s, the mid 70s, I believe 72, 73%. So, I mean, you can make a fair amount. You just have to, be diligent on what we're doing. And again, your agent or your financial strategist that is working with you will stay on their game because that's what we do at Truevir. And then it also may not be right for you if you don't have steady income to make regular payments. If you're based off a commission basis, it can work for you, but we also have to plan ahead of time, right? I do have clients that work off of commission, but their business is pretty steady, knock on wood, and they do have the means to make regular payments into this type of life insurance policy to build their cash value and everything. But yeah, if you don't have a steady income, um, at the time of your consultation. It might not be the right time, but it could be 6 months down the road. You never know, right? So, next steps. If you want to learn more about this, please talk to your family. Um, I talk to husbands, I talk to wives separately, but it's always best if you talk to the family together so that we know what we're planning for. You have a better idea of what you're getting into and what you want to protect, as well as what you want to save for, right? Looking at your budget, figure out how much you can comfortably put in each month. We also do a financial analysis for you to help with liabilities, assets, money coming in, money going out. We assist with some budgeting as well. So, you know, you always want to look at your budget before you make a decision to you know, put your money into something that you want to grow, right? Meet with an advisor. Our QR code is right here in the corner. If you guys would like to talk to somebody, this sounds interesting to you, you want to learn more about it, please feel free to talk to us um, and schedule with us. QR code, like I said, is right there. Comparing other options, looking at different policies and companies. Not all super piggy banks are the same, right? Again, we talked about caps, fees, and all of that. At Truevir Financial, we work with multiple carriers and we try and write up the best fitting tailored approach or carrier to you. So we want to make sure that that is always going to be number one is making sure we're doing what's best for our client and then make a decision. Once you feel comfortable, you can move forward or you can take time if you need. We can have a meeting and you can allow us to dream for you so we can see a big picture for you guys, right? Um, and that is something that we take very seriously at Truevir is making sure our clients are happy and satisfied with their choice with us. So bottom line, of course, you can read everything, but at the end of the day, you have protection on your money so you don't lose, and you have protection for your family so they don't lose when they lose you, right? Funerals, costs of having a loved one lost are expensive. Making sure that you have that safety net and that peace of mind to ensure your family while also having cash that is growing so that you can utilize it to build more assets for your family is a great feeling to have. Um, from personal experience, I have four of them, all my children, my wife, myself, so that my entire family is protected, and there is a cash savings component that is growing, right? Now I wanted to get into a couple of scenarios so you guys can see some numbers. This one right here, if we're looking at it, is, and for instance, we're saving for a child, right? We started at age one. We're putting in $150 a month, which comes out to 1,800 a year, and we have cash value growing. So, say if they want to go to college, you want to use it for a car, what have you. We get to age 18. On the conservative side of things, there should be about 34 grand ready for you to go. And if the market does extremely well. We have some very good years because not every year is going to be down. Not every year is going to be a zero. We are going to have some positive years. High side, which is still conservative, projected at $39,000 and change. Like I said, that can be used to help with the college fund. That can be helped to um, be used for a car. One of my strategies that I like is having a child having a or, parents have a 529, which is a child education savings account, in addition to an IUL. That way, the um, education component is taken care of, and then they also have this nest egg that they can use to say, if they go to college out of state, buy property, have them become a landlord, and now you have a growing real estate portfolio while getting income from that um, rental property, as well as your child is going to school and getting an education. So here we go. Next one. If we're looking at it for an investment piece or an investment tool, should I say, um, and having cash value available to the client immediately. Like I said, there's certain ways to design these policies to where, say you as an individual, 36, 30, 37 years old, you had a floating 401k, we paid the taxes, we put $50,000 in, and we put $500 a month into this super piggy bank, right? Designed specifically for the thought process of using it to build your portfolio through, let's call it fix and flips, buying a car, putting on Turo, making money to make more money, or using money to make more money while your money makes money for you. Say that 5 times fast. So looking at it this way, right? There's $56,000 put into the policy, $53,000 is available. You would be able to use probably up to 90% of that cash value. So call it 50. We take it right back out and we use it to, you know, put money into a fix and flip, right? We get the profit back from the fix and flip. We put the money back into the policy. rinse and repeat, while also still feeding it at $500 per month, um, all the way to age 61, where projected wise, conservatively, $384,000. But on the higher conservative side, we could have up to half a million, depending on how we fund it, how the market does, and with the indices, as well as are we paying back ourselves, right? Um, and then last example for just a supplemental retirement policy, right? We're 37, we're able to put $1,000 a month away after expenses and everything from our daily lives. So we're putting $12,000 a month in, or $1,000 a month, or $12,000 a year in, all the way up to age 61. And the cash value grows at age 61 to 642,000, or, on the higher conservative side or the conservative side of half a million. If you can see right here, you've only put in 300,000. Sorry, it's on my end, it's blocking, but you've put in $300,000 over 25 years of you having the policy. And be it conservative or high side conservative, we've capitalized and had more cash value than what we put in, right? Almost, thank you, almost double on the higher conservative side, right? So I hope those are some decent examples for you guys to get wrap your mind around and start gaining or growing some questions. And then, as well as that, I do want to invite everybody on the call to our Wealth and Ways financial literacy event this Saturday from 11 to 2 here at the Daily Desk, 490 Chadbourne Road. Um, we'll be going over some of the basic principles of Truevir and how we can utilize these policies to our advantage, right? Because at the end of the day, we wouldn't do it without having any advantages, right? And that wraps up. Are there any questions? Also, QR code is right here in the middle.
Yeah, so this is not a question, but I just wanted to add to some of what you were saying. So even in those illustrations, the current scenario, or even if you went back to it, the current scenario is usually estimated at what, roughly 6%. But sometimes in the index performance, we
Mm-hmm.
do see, yeah, there's an alternate scenario and a current scenario. So alternates usually roughly 3.5 to 4%. And then current scenario is estimated at a static 6%. So even like just from today, I was looking at some index performances. Some are above 8, some are above 15. I seen 15.9 just recently. So I mean, again, like we like to under project these performances, right? And we like to under promise and essentially over deliver with the performance because that's the thing is like we would want to show you these types of numbers, but then you can have much more in the long run, right? So again, these numbers are super conservative when it comes to that. So that's just a comment. And yeah, like the use cases that you have, I was just thinking when you were talking about the aspect behind protecting your family as well, right? I think this is one thing that I faced just recently, just for you guys to even hear this, is that I had a client, his sister passed away out of nowhere. And, my prayers and condolences to him still. And just like what you were saying with the burial expenses, they want the money fast and quick, and they don't, it's a fast turnaround, right? And so he was talking to me about that. And so the thing was that he had enough reserves in his policy to where he can borrow against it and cover all of the burial expenses. So he was able to cover that. So not the sister didn't have life insurance, I mean, unfortunately, but for him to be able to cover those expenses, even just through his cash value growth, I mean, that's a huge piece to it as well, man, because I think yeah, just thinking about the burial expenses and thinking about all those different aspects to it, like the turnaround is very fast when you want services, even just the minimal services, you know? So, I mean, I hate to talk about death on here, right? But that's just the reality. And so even having enough reserves to cover an emergency, right? So anyways, that's just a comment I wanted to add in on that.
Um, any other questions? Anything, any clarification needed? No? All right. Well, like I said, we would love to have you guys here at a Truevir Financials Wealth and Waves event on Saturday. We can go over what we went over today or anything else that you may have. Thank you, Martin. And also, if you are looking to hear more on a one-to-one approach and can't make it on Saturday, please feel free to scan the QR code right now and then, set up a meeting with one of our strategists or myself, and we can get everything clarified for you. All right. Well, you guys have a blessed night. Thank you for your time on this middle of the week hump day, and look forward to hearing from all of you guys soon. Y'all have a good one.
Thanks, Brandon.